We're going to talk today about trading and trading one strategy for success. I trade gaps. I specifically trade gaps. I will tell you that we shorted the market today. It was a beautiful sell-off. I have been trading for a very long time now, since 2008. It's hard to believe, and it's almost 2026. So when I started trading, I didn't know what to do at all, and I ended up teaching myself how to trade. So it was a very interesting chapter in my life, and I would never want to repeat it because it was tough. I did not know when I was going to figure it out. And you know, a lot of times you go through things in life, different things. It could be relationships, financial things, job stuff, health things, family situations, and you don't know what's going to happen next. I mean, we can't all predict the future. We don't know, you know. But we can make good choices about our own lives. And for me, I wanted to change careers. I was doing mortgages and I wanted out. I knew that I wanted to change careers. I knew there was something to trading. I truly believed in myself, and I knew that I could somehow figure it out. I didn't know it was going to take me 3 years of my life. But, you know, if I had quit, then I would have never made it. So if you're someone that's been attempting to trade for a very long time and you haven't found the right mentor, found the right strategy, figured it out on your own, you're not alone. I mean, everybody goes through that. No one's like born today and starts to trade and then all of a sudden makes money and makes millions of dollars and never looks back. That's just not realistic, you know? So we're going to talk today about what I do. And again, you can chat in the room. Got to go down to the chat box for everybody signing in. Now you can chat and ask me questions, okay? Or you can also email me questions. All right, let's get started. So again, if you have questions, you can email me at melissa@thestockswoosh.com. I was talking about the market. We shorted the market today. Market had a gap down. Market closed here, gap down, fell off a cliff today. Again, today is what, Tuesday. We actually are closing red, but this was 1 o'clock in the afternoon here. And we did have a gap down today, and we did a day trade in the room here, and we got in and we had a nice flush. We had a nice sell-off. Again, for those of you that don't know what I do, I actually prefer to short. So it's been a great time to short here the last couple of months. And if you've been one of these people where you've been trading and you've been losing money and you've been stuck doing the same thing for the last several days or weeks and it's not working, you've got to get out of a rut. If you find yourself in a rut with your job and you want to change jobs, change careers, again, no one's going to do it but you. No one is going to make the necessary changes for your own life but you. And no one ever said it's easy, but knowing that there's challenges, knowing that there's time that it takes to learn something new, knowing that it costs money to pay for a class like mine or open up a trading account and all of the above, it's worth it in the end if you know that you're on the right path and you truly believe like this is something that you really want to do. If you make up your mind and you say, I want to do this, that's it, I'm doing it, period, end of story, whatever it takes, then you do it in a cheerful, optimistic, positive manner where you're happy about it, even though it can be challenging, okay? And again, learning is something that definitely, you know, is different for everybody. You know, some people are very fast learners, some people are slow learners, okay? But, you know, think about it. Why are you here? To learn that having one strategy is the key for you to make money in the market on a regular basis. It really is. Jumping all over from thing to thing to thing is not going to get you the success that you want. It's a common mistake that a lot of traders make. They want to become a jack of all trades and a master of none. That's not going to make it in the market. And actually, my strategy is really based on a lot of common sense if you think about it. And this idea of following one thing makes sense too, okay? But if you want to do this for something for career, you have to make money on a regular basis. And what does that mean? It means you need more winners and losers. And some of the winners have to be big. So again, think about it. It's following common sense. I'm following the moves that institutional money makes in the market. Again, what happened today? We sold off. So again, institutional money sold the market today, dumped it, you know, dumped positions in stocks too. And what am I doing? I'm shorting. Mostly, again, sometimes I go long, but I'm mostly shorting. And I'm looking for the institutional money. And then I'm capturing those moves in a small time frame in a small period of time daily. On a 1-minute chart as a day trade, and in an option, I'm trading the weekly options on a daily chart, okay? So again, I'm using one system. Whether I do day trades, options, you could do both. I'm doing both, but again, in the room, I'm doing day trades. I'm not doing options in the room. I'm doing day trades in the room. I hold options for a little bit longer, okay? Now, I get this question all the time. You know, do you do both the same trades? Sometimes, but not always. So I might do a short, a day trade in BA and a put in BA, or I might not. I might do a put in BA and then not do a day trade, or vice versa, okay? So again, it depends what you want to do. I find there's benefits to doing both. Now, again, we were talking about gaps. For those of you that don't know what a gap is, let's go over it. Oops. This is a daily chart. So I'm going back here to the end of October. BA closed here, gapped down. So what is a gap? A gap is a difference between the close and the open. So BA closed at one price. This was the 29th. And opened at a different price on the, I'm sorry, no, this is the 28th. This is the 29th. Closed at one price on the 28th and opened at a different price on the 29th. So BA gapped down, okay? So you have gap downs and you have gap ups. It's a gap up. BA closed here at 4 o'clock. We always close at 4 and open at 9:30 the next day at a higher price. So this is a bullish gap. This is a bearish gap, okay? Now, if you did a day trade here, you would have made money. If you shorted it. If you bought a put, boom, you would have made money too. So again, this is what I'm looking for every single solitary day in different stocks and anything I can find. ETFs, I'll trade. Like I said, today we did the QQQs. I'll do the Qs. I'll do the SPY. I'll do specific stocks. Now, this was a option we did. I just want to show you. This was on the 29th. We did the 210 BA puts. So I'm going to go back here. This is this day. We were just talking about this. Did the 210s, okay, and I actually called this late. This is late for me to call a trade, 2:22 in the afternoon. I don't usually do that, but I saw that this would continue selling off. So I called a lower strike and it worked. So the cost of this was $275. You could have bought one and spent $275. Was a really nice trade. Again, I'll go back and look at the chart in a minute. 410% return on investment. If you risk 96.25, which again, I consider myself an advanced trader, I've been trading for, 18 plus years. Sold at 14, made $39,375. What if you did a smaller amount? What if you only risked $1,375? Still a great trade. Could have made $56.25. That is a lot of money for somebody that is risking around $1,300. So let's just go back and look again at the gap and the sell-off. So we did it here, went do, 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 do. See it? And actually, you could have even held it longer. Now, I don't typically hold a trade into the very, very last day if I'm in the money as much as I was in this, but I will tell you, you actually could have, and I don't know what the value was on the last day, but it had value. Because it broke 195. Remember, this was the 210s, and it would have been well in the money, and you could have. I usually don't do that, but you could have here. So again, what were we trading? We were trading momentum, okay, to the downside. Again, I like to short. Okay, I like to short. And any questions, let me know. All right. So again, you could have taken one. You could have taken more. It's, options are, you can trade options in your retirement account, or you should be able to. You can ask. You don't need a margin account. You can trade options in a cash account. And one of the reasons a lot of people like to trade options is because of the fact that they don't need to worry about margin. Now, again, we've been doing BA as a short too, but I do like to do options because I like to hold them. But the point is that I'm looking for opportunity. And again, I'm looking for opportunity every single day in the gap. And that's what really counts if we're going to do this to make money. Now, might there be some days where I don't have any gaps? Sure. If that, I can't make something up that's not there. I can't change something. I can't force it. So if it's a slow day or for whatever reason there isn't any good gaps, then I don't trade. But again, there are some days where I might do a couple of trades. I usually try to do one thing a day, but if it's a busy day, maybe I'll do more than one. Now, I wanted to show you the results just for the last week. This was actually through last week. In the room, I'm going to go over every trade in here. These are day trades, okay? One day we didn't have any good gaps. Actually, that was the 12th. Okay, that was Veterans Day. And this is an advanced trader risk, around 4,500. Some trades were a little bit less. And this is, I'm going to go over each trade, but the profit was $42,740 for these couple of days. So again, when people are always wanting to push the envelope, trade all day, I don't do that. I just don't do that. It's about like you're trying to throw a dart at a board and hit a bullseye. And when you do that, you should stop, because you're not going to hit a bullseye all day long for 6.5 hours. So you say, well, how can I make a lot of money doing this then? You add size. You get good where you have the accuracy level where you can feel confident and adding the size. Otherwise, you're just over trading. You know what I mean? And the odds go against you also as the day goes on. So I typically focus on the morning because the odds do go against you as the day goes on. And other things happen. Other things affect the market. Okay? So let's look at here the first day, the 7th. Again, what happened here? Now I'm going back here, November 7th. Market closed here, gap down. You say, well, the bar is green. So it was a gap. And we played it, boom, short. So here was the trade. Again, you could have done this as a put. We've been doing puts, but this is a day trade. No, don't get confused. Entry was 607.05. Again, 2,800 shares, risk was 4,900, exited, broke 600, 599.25, out. You would have needed a margin account to do this. You could trade at a retail marketplace. You could trade at a prop marketplace. Again, you could have bought a put, but we've been doing puts. So again, I like to do day trades too. $21,840, and again, this is this taily thing. So we played the tail. It actually kept going. I want to show you here. Kept going further, even after I got out of it. But I like to be in and out quick. Done. Boom. So this was the 7th. Then we did the BA. Again, we were just talking about BA. That was here. Again, stock closed here, gap down, open, dropped, boom. We shorted it 195.25. Again, this is a margin trade. Got out at 193.30. I'm trying to usually look for $1. Got more than that out of here. Risk 47.25, made 87.75. This is a beautiful, beautiful, beautiful sell-off. Right here. Do, in and out, done. Boom. Call it a day. And again, one of the benefits I find that a lot of people find about trading with me is that they're done quick and early in the morning. I have people trading in all kinds of different time zones. Some people go to bed after they're done trading with me. Some people go to work after they're done trading with me. You know, I don't sit all day till 4 o'clock doing day trades. There's another really good one we did, Amazon. This was the 10th. Stock closed here, gapped up, rallied. Again, we're on November 10th. This was a long, actually. This is one that we actually did that was a long. Entered it at 249.30. Quick got out. Target was 250. 250.50 made $3,000. Done. Boom. Again, you can go back to bed. And again, these are margin trades. Then on the 11th, what did we do on the 11th? Oh, we did NVIDIA. We did NVIDIA here. Stock closed here, gap down, open, dropped. Okay. Shorted it 195.50, got out 193.15, made 47.25. Again, you would need a margin account to do this. What's the benefit of having a margin account? You don't have to have all cash. You can, we're in and out of trades in 5, 10, 15, 20 minutes, a half an hour, maybe an hour. You're just shorting it, and then you're covering the trade to exit. Okay, it's called a buy to cover. You're not buying it and holding it. And again, we're shorting here. Then we didn't do anything on the 12th. okay? And then we did NVIDIA again on the 13th. Here, stock close here, gap down, open, fell off a cliff. Again, this was a nice short. Entry was 190.70. Beautiful trade. Again, looking for $1 or more. Got out of 189.60. Boom. Done. Again, you could take 1,000 shares. You could have taken 500 shares. Whatever you want to do. Again, we've been trading a lot of these in options too. I don't have all the options in here, but again, the day trades are the fast trades. So again, for 5 days, $42,740. This is an average risk of around $4,500. Some were a little bit less, some were a little bit more risk. You can risk $300 a trade. Your share size will be different than mine. But again, if you're in the room with me, you take the trade when I call the trade, and you get out when I get out, okay? Any questions here so far? And I see some people that came in late. Again, we just went over all the day trades of last week just to show you 1 week. And I wouldn't even say last week was some kind of monster week, because again, there was a holiday one day where we didn't do anything and it was low volume. So again, you're going to have very busy days. You're going to have some days where you don't do anything. But most days we're just looking for 1 trade. We're just looking for 1 trade. And we get in and out very quickly in the room. And again, the benefit of being in the room is I'm calling the trades in live time. I'm not day trading options. I'm not. If I do an option, I'm buying the put or I'm buying the call, and then I'm selling it to exit it, and I'm holding it for a much larger move. Could be the same day, could be overnight, okay? Now, again, the system's the same. So if it works for you to trade options, if that's the only type of account you have, if you don't have a margin account, then that's what you can do. If you don't feel comfortable trading options because you don't have me in the room or whatever, then fine. Then you do the class and join the room, and you do the day trades. But it's the idea of putting the odds in your favor using a high win ratio system where you're getting higher odds. I'm putting the odds in my favor by looking at criteria each and every single morning before I take the trade. And I'm saying, based on this criteria, this has a high odds of what? Selling off, like the market today. Again, let me just pull this up. Let me see if we can see this without. Can everybody see the market? Can you see the chart without me stopping and starting it? Hello, is anyone alive? Hello. Is anyone alive in the planet Earth? In order to chat me, you have to go choose my name in the chat, right in the chat. I think you have to click new chat and then pick my name. Either everyone's asleep or no one knows how to do it. Hope you're not asleep. It's only 4:20. Although it's actually getting dark out. It's actually dark. It's actually dark I'm in New York City. It's actually dark right now. I should just go to bed after I'm done here. I mean, it's just like it's getting dark so early now. It's almost ridiculous. JT can see. Okay. 1 person's alive. Alonzo's alive. Bill died. Oh, that's a shame, Bill. You missed a good trading day then. You can miss a good day tomorrow too. Yes, we're looking at the Qs. So anyways, getting back to what we were saying, we're trading momentum. Okay. So again, momentum. When something comes in, you want to get the sell-off. And if I go long, which again, you know, I've gone long before and I'll go long again. I didn't go long today, but again, I'm looking for momentum to the upside when I go long. Actually, we went long the market back here. Actually, I did go long the market here. Actually, 1027. Wasn't even a month ago. It's kind of funny now looking back. What's today, the 18th? Next week's a month. It's kind of hard to believe. JT shorted the market. Well, you don't need me, JT. If you know what you're doing, why are you here? You know what you're doing. You know how to short and what to short. Why are you here? You don't need me. You don't need my class. Bill died after the market. Why did you go long today, Bill. Perry, I was saying, do you see the chart? Alonzo, why do I prefer shorting? That's a wonderful question. Maybe Rick can answer that question. Rick's actually on the options newsletter. Rick's trading with me. Rick, why do I like to short? Why do you think, Rick? Oren is alive and well. Oren's in New York, and it's also black and dark outside. If Oren's in New York too. I'm probably better than you. I'm the queen of shorting. That really is true. Actually, if anybody has time, I don't want to get on a tangent here. If you have time, after we're done tonight, you should go to my YouTube. I was on the Charles Schwab network yesterday, and if you heard me on that hit yesterday, I got the copy of the hit. I posted it on my YouTube. I called the sell-off today on television yesterday at 2:30 in the afternoon. I was almost jumping out of my chair when I was talking to the girl because I said, I don't think people have any idea what's going to happen next. And I don't know if anyone even understood what I was saying. That was yesterday, but it was pretty funny because then we did gap down today and we did sell off today, and I predicted that yesterday. Now, there's some days that, again, I have no idea how we're going to gap the next day or whatever, but yesterday was one of those days where I was like, oh, we're really going to be down tomorrow, and we fell. Rick said I like to short because of big money. True, but you can make money going long. I mean, let's not deny it. You can. But the fact is that shorting, Alfonso, actually gives me a niche because most traders actually have no idea how to short, or they're not good at shorting. So first of all, some people don't short at all. They don't know how to. It scares them. They don't get it. Then there are some people that do short that are regular retail traders, but they're not good at it. Then there's some people that short and they are not doing it right. You know what I'm saying? So long story short, it really gives you a niche as one individual, as a retail trader. If you can learn how to short, I've made a whole career out of it, even during very bullish market periods. The other benefit of shorting, Alonzo, is that you can make money shorting in a bullish market or a bearish market. Very difficult to make money going long in a bearish market. Fact. Now, I'm not saying the market goes bearish. I'm not predicting that. Maybe I'll change my mind, in 3 months from now. But right now, I'm just saying it's a fact that the market could be bullish and you could make money shorting. But if the market turns bearish, you're gonna have a hard time making money going long. I don't care what you're going long. You're gonna have a rough time. You know what I'm saying? And even in the last week, I'd say people that prefer to go long and don't know how to short are having a rough time. I mean, I just know it, fact, because I've been talking to people. And I've been trading for a long time. I'm very experienced. So again, that's some of the reasons. I also like to make money very quickly and fast. So you can make money, stocks sell off faster than they rally. Rick, I don't even want to speculate at this point about tomorrow. I don't even want to speculate. You've made money. I hope you're booking some profits. You can hold some things, book some things. Don't be a pig, though. Don't be a pig. I have no idea what NVIDIA does. I did talk about that in the TV hit as well. NVIDIA could have fabulous earnings and still sell off. I talked about in the hit. Or NVIDIA could rally. But as far as I'm concerned, that's 100 years away. Tonight is Tuesday night. NVIDIA doesn't report till Wednesday night. So it's not going to affect the market till Thursday. And right now in this market, that's 100 years away. It's 48 hours. That's literally how you have to be thinking about your trades. So that's like 100 years away. So it's irrelevant to me at this point. And I didn't do NVIDIA into the earnings, and I'm not going to. Panic. Bill got it. Just saw Bill's comment. Bill got it. Market drops faster. Panic sets in. You're correct. I put trades on during market hours, Bill. I do not trade. Well, first of all, I can't do options unless it's between 9:30 and 4. And I'm doing trades on margin. So I'm doing trades between 9:30 and 4. There's Ken. Ken is new. What time of the day do you usually place an options trade? What is usually the option length? How long is the average hold? Do you use stops? There is no such thing as a stop in an option, Ken. The risk is the stop. So if you risk $1,000, that's the stop. You can't lose any more than 1,000. Do you follow me? There is no stop. You can have an imaginary stop if you want to. You could say, well, I'm going to kill it. I'm going to kill it when it gets down 500 if I risk 1,000 at 50%. But it's not a real stop, Ken. You'd have to actually kill it. And then you'd have to be watching the trade. And that's too difficult for me to do. And I don't trade like that with stops. So if I don't want to lose more than a certain amount, then I just keep that amount within that amount. Do you know what I'm saying? So in that example, Ken, I would risk $500 in a trade, not 1,000. Do you know what I'm saying? Because if you feel the need to kill it when it's down 500, then you should be risking 500. Do you know what I'm saying? Because there is no way to really put in a stop. Like, let's just be frank. Now, when I'm doing a day trade, I put in a stop because that's a real stop. It's a hard stop. I call it, it's a limit order stop. It will stop me out and I will lose if it hits through the stop. So that's real. As far as taking trades, usually in the morning, again, between 9:30 and 10. But I did show you a trade there we did later, an option trade later, but that's, I would say 95% of the trades we're doing in the morning. As far as options length, again, if a trade goes right away, so you get out of it that day. If you're up 100%, you can get out of it the day I call it. If it's a Monday, get out. Again, I just told Rick he should be chunking it. We've been very active. So if I call 10 trades, you shouldn't hold 10 trades if they're all up, like a pig. Get out of 5, hold 5. If you're in 3, get out of 2, hold 1. Or if you have 4 contracts, get out of 2, hold 2. You shouldn't hold everything all the time, always, 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 unless you're 100% conviction that you know it's something's going to work. And the only person really should ever do that is me, or unless I direct people in the room to do that, which actually today I did tell people to stay with the day trade, and I closed out the room, and we fell into lunch. So that was a little unusual today. But there were people that got out of the shorts in the morning quick, because that's what we normally do. But today I felt like we'd have some more traction, which we did. But you have to be available in the morning. And if you can't watch all day, Ken, again, I think I emailed you this, you put in a sell. So if you get the trade at 10 a.m. and boom, you buy it and you pay $3 and you can't sit and watch it, or you have a doctor's appointment or whatever, then put in a sell order at 450. See if it hits. Or you could put in a sell order for 6. If it hits by 4, before 4, you'll be out. You'll make money. And if it doesn't, it cancels. And then you're in it overnight. And you should be doing that, and anyone should be doing that has to go to work or something if you can't watch it. Is my process entirely done on margins? Not for options, Alonzo, because there is no margin on options. It's a cash trade. A day trade, I am on margin. So I don't know. I don't remember which you want to do, Alonzo. But again, you'll have access to both if you sign up for the special. Yeah, Rick, I don't want to talk about any specific trades right now because you're a member here and not everybody is. But I think you're fine if you're in stuff. That's fine. Not fast trades for now. I don't know what you mean, Alonzo. You need a cash account for options. And you got to tell the place that you're doing an options account, that you want to do it on cash. Day trades, you got to be in the room, JT. You have to be there live. Period. End of story. Room opens at 9. Cutoff time to be there is 9:20. If you want to get the trade, you got to be there. You got to be on time. Some days we're done like 9:40, 9:45. We made money. We're done. Boom. You can go to work. But we start early. Okay, let's get back to what we're talking about here. we were talking about conviction. There is no substitute for having conviction and confidence. Like JT said, he shorted the market today. And then I said I did too. And he said, well, you probably, know what you're doing more than me. Yes, it's called experience. It's called doing the same thing for almost 20 years. That's a lot of confidence and conviction, and I don't do anything else. It's like if I say 100% conviction and no chance of failure, the market's going to sell off today. That's like, it's how do I know that? Because of experience and because I'm using my system. You say, well, then I don't have the experience. I'm only trading for like a month or a year, or I've never even learned your class yet. I just did it or whatever. I'm just going to do it. I'm new. You get experience by doing something. That's it. You have to do it and you have to learn it. And as much experience as you need under your belt is what you've got to get. So again, that's what it is. But if you follow someone that has conviction and you follow someone that has experience, it makes a world of difference. It helps you feel better about taking the risk. Just saying, listen, what do you think about this? What do you think about this? Or just hearing me in the room. So again, it's your money when you're taking the trade and you're putting the position on. Obviously, you have to press it, you have to do it yourself. But your mind controls how you do it and how fast you do it and how you think about it and your feelings and your emotions for it. Again, so many people out there, I've been doing this for a long time. I've done a million webinars. They say, oh, you have to program it and you just program it. You just buy this program and do. No. Stop trying to pretend that you are not a human being, that you are some kind of robot. You're not a robot. You're never going to make decisions in life about that, being a robot. You're not going to serve yourself, even in reference to trading or financial matters, by being a robot. Again, go back and listen to the clip or if we have time, I'll play it at the end on YouTube. My emotions help me trade because I have the knowledge and the information in my brain, and that allows me to make the decisions and the choices to do it. And I'm telling you, this is so important. And you've got to listen to what I'm saying. Because if you're trying to be a robot, you will fail. Because guess what? You're not. You're not. So there's no getting around that. Rick says, tell them I started with 5,000 cash and almost doubled it already. Yes, I have to. I think I put your testimonial in here at the end, Rick. Or I have to put it in an email or something. You're doing well, but you need to do the class, Rick. Rick's trading options. Because until you do the class, you're still going to be all over the place. So you're doing well, even though you didn't do the class, but you would be doing better if you did the class, to be honest with you. So I really think that has to be on your plan. Okay, let's talk about institutional money. It's in charge of the market and stocks at all times. A big flow of money going in a certain direction is what moves the market. Stocks creates momentum and sets the trend in charts. And when you're looking for institutional money, you're really reading the side of power in a stock. And it's so easy to make money if you're on that side of power. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. And this is extremely, extremely, extremely important. So again, following that money, not retail traders, is how you will be successful for the long haul. Becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. For example, today, was there any hedge funds that went long the market? Maybe. There might have been some small ones in the morning that did. Maybe. But they lost. Or they're down. So again, it was mostly retail traders, actually, that were going long. Learning advanced technical analysis is required to be successful because price is really what counts. What does this mean? It means reading price action in charts. So can you short every gap down? No. Can you go long every gap up? No. Can you short every gap up? No. Can you go long every gap down? No. Like we gapped down Friday and we rallied. Okay, that's what happened Friday. I did not short the market Friday. Actually, I was off Friday. I was at the dentist. But the point is that it's not just so easy to always go in the direction of the gap. If it was, then I'd never lose, quite frankly, but it's not like that. Again, it takes a certain niche to know what to look for. Comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. It makes a difference between you making a little bit of money or losing. Making a lot of money and winning a lot. Enough to cover whatever losses you have and then move ahead. Elevate yourself, your trading, and your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. Again, it's one of these things where if you've been trading for a long time, you've maybe tried many different strategies. Maybe you're using all kinds of different indicators. You know, there's not one thing that's going to tell you something's going to work. And that goes for me too. There's not one thing that tells me, oh, boom, it's going to do it. No, I look at an entire rating system. It's 26 points. There isn't any one thing. Not even for me, okay? That's where the analysis comes into it. And I have to take the time in the morning to go through it. I don't just trade on the fly. I can't. How can I do that? I wouldn't be as successful, okay? You have to take the time to learn it, and you have to study it, and you have to do it. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. Knowing how to read what institutional money looks like is essential to becoming a successful trader, and you can win big trading on the side of power. You can make money in the market if you know what to do. Many people don't. They absolutely do not know what to do, and that's why many people lose. And many people get sucked into bad trades, or they're not focused, or they don't have a strategy, and they're all over the place, and then they double down, and then they lose, or they refund their accounts, and then they do something else, and then go to the next thing, and the next thing, and the next thing, and they never get anywhere. And again, if you're one of those people, just stop that craziness. Get off the merry-go-round. Because I'm telling you that one focus on one thing is all you need. Okay? That's it. And it makes life a lot less stressful when you're just focused on one thing. Again, one strategy, one thing. Just think of it like you're a human being. You know, if you tried to play baseball, professional baseball, football, golf, tennis, you wouldn't be good at all those things. Not even Tiger Woods is good at all those things. You know, you pick one sport. Pick one trading strategy. And for me, it's golden gaps. And again, this is a system that I've advised and figured out myself. So what is a gap? A stock gap in the opening price today is different than the closing price of yesterday's trading. Simple. So again, Rick said, where do we gap tomorrow? I don't know. I don't know. We have a lot of data tomorrow morning. We actually have a lot of earnings tomorrow morning. So I don't know. I don't know where we gap tomorrow. Could gap up. Could gap down. I don't know. Now, yesterday was different. Again, if we have time, we'll listen to the clip. I felt 100% conviction we gapped down today, but I actually thought we were going to be down more than we were, to be honest with you, but we were still down. A gap is a break in price action from one day to the next. Now, here's the Amazon. So again, actually this I don't have today in here, but this closed here, gap down, closed here, gap down, fell, boom, dropped. So again, we did puts in this, which you could have made money in. We did different puts in this. And again, you could have day traded this. But again, it closed at 4, opened lower at 9:30. Closed at 4, opened lower at 9:30, fell. Even though this is a tailing thing, this fell. That was yesterday. So it had a sell-off. Here's another one here, PLTR. I'm going to go all the way back. Stock close here, gap down. Stock close up here at 208, 207 and change. Gap down here to 191 and change. This was the earnings. Again, this was a long time ago now. It feels like a couple of weeks ago now, beginning of November. But this was a gap. Again, there's bullish gaps too. Could have gone long here. Closed here, gapped up, rallied. It's a big fat green bar. Could have bought it. Okay. Again, we were talking about Friday, so you can't short every gap down. If you shorted Friday, you lost. Why? Closed here, gap down, rally. This actually got bought Friday. It was green. That was on the 14th. But gaps have huge opportunity because they spot power money. And that's how you're going to make money, whether you have 100 shares or 1,000 shares or 10,000 shares. So how do you find gaps? That's easy. They're all over the place. There's thousands and thousands and thousands of things that gap every day. So finding them isn't hard. Qualifying and finding the good ones is where the challenge comes in, and that's what I devise a system to figure out. And if you come and take my class, you'll learn this with me. And what's the benefit of being in the room? I already go through the ratings myself. The benefit of being on the options newsletter, I did the ratings myself for you, but you should do them yourself too. Again, if you know what I'm looking at the same time, you will trade better. You will make better decisions. You will have higher level of confidence and conviction. There's no substitute for that because you're risking your own money. I could say, oh my God, I love the market. It's going to sell off. And you could say, I believe Melissa. I know she's right a lot. Should I do it? But the reality is you may not hold it as long. You may get out too quick. You may not risk as much if you don't understand what I'm doing. Do you understand what I'm saying? So understanding helps you trade, and it just helps you make money. So I find gaps, and then I rate them using the checklist. Gaps have to be qualified. Like I said, and the checklist tells you what to look for in the price of the stock. And again, there's lots and lots and lots of things out there to find on each and every day. We're still in earnings season. NVIDIA has earnings Wednesday night. Target has earnings tomorrow morning. I don't know what it does. I'm going to do something. So again, there's lots of reasons for things to gap. Could be earnings, could be news. But there is only one thing and one thing only that can move the direction of a stock, and that's money. And it's not a little bit of money, but a lot of money, or what I call power money. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people. Guess what? Which there's a lot of in the market. There's lots of funds, small, big, medium, large, trading desks, big professional traders, lots of retail traders, lots of people, lots of black boxes. Okay? So there's a plethora of money to be made in the market if you know what to look for. That's the benefit. That's the good news. You're like, okay, we scratch your head and say, well, how do I find it? Well, that's the system I developed called the rating system of the Golden Gap. Gaps happen in the market on a regular basis. However, some gaps are much better than others. I mean, I'm not going to lie to you. There's some gaps where I'm like, this is fabulous, fabulous, fabulous. Hold it. And there's some I'm like, we're in and out. Done. Boom. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps of the market are gaps that signify change in direction, which can happen, or a bigger move in the same direction. That can happen too. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring, and that's important too. And that's how you know when the power money will flow to pay you. Again, whether you want to hold something for longer. Again, a really good gap, you could do a day trade, you could do an option, you could hold it, you know, or you could get out of half and hold half, like I was suggesting in reference to the option. But again, it's the checklist, it's the meat and potatoes, it's the rating system that tells me I like this, I think it's going to follow through in the direction of the gap. And again, in the case of a gap down, I'm looking to short it. And again, I'm mostly short, but we do go long, but I'm looking for money, big money, big money, big moves. Is finding the gaps process agnostic of the asset type intrinsic value? I have no idea what you mean by agnostic of the asset. I don't know what you mean by that. If you're asking me, is there something that's specific to each individual ticker symbol that would vary from one thing to the other? No. You could make a chart of Fruity Pebbles, and you could chart it. I could chart Alonzo's trips to the gas station, to Walmart, and chart it on a daily chart and come up with a prediction. So I don't know what you mean by agnostic of the asset type. I have no idea what you're talking about there if you want to explain it to me. But anything that you could chart, any chart that exists, any chart at all, I could say this is going to go here. Even if I don't know what it is, even if I never saw it or heard of it or traded it before, that's how good I am at reading gaps. I don't know if that answers your question. As far as value of a position, particularly in an ETF or a ticker symbol. I do not do penny stocks. I do not do low float stocks. I don't do stocks that don't have any volume because I don't think they're going to move that much that makes it any beneficial to me to do the trade. I think it's too risky. It could be too spready. I don't think it's going to have a big move. I'm trying to get a big move. I'm trying to make the most bang for my buck. And institutional money is actually not trading penny stocks. So that's a waste of my time. So for most of the stocks that we trade, if I said Zoom or Adobe or FedEx or something, you're like, oh, FedEx. Yeah, I had to call FedEx. I had to go there yesterday and drop something off. You've heard of the companies. Like you can wrap your head around it. Everybody has an iPhone. You're like, oh, Apple. Oh. So it's not like we're going to trade something that you're going to short it or buy the put and you're going to get stuck in it and it's going to go under. Or it's like we're not doing the meme stocks. Do you know what I mean? Like we're not doing anything that's batshit crazy that you're going to get hurt in. Like I'm very even keeled. And again, like I want to make money. I don't want to get hurt in anything. So I'm very even keeled. Like I'm doing things that I feel high level of confidence, massive volume, never gonna like be caught in a position where they are bankrupt the next day or something or can't get my money out. Like, no. Do you know what I mean? Like very do. That's what we're doing, those kinds of stocks. And let me tell you, those are the best stocks to trade because those are the stocks that have a lot of volume and options and can move. And those are the stocks that have big swings. And those are the stocks that you can get filled very easily in day trade. Someone was asking me about get fills. I never have a problem getting filled. And no one should have a problem getting filled. And everything's very liquid that we're doing. Because we're doing like do. We're doing good quality things that behave, not crazy stuff. Yes, exactly. U.S. equities, big moves. Okay, so you shouldn't have to worry about any of that. Good question. Any other questions? So again, think about it. You're like, okay, a lot of people are going long. The shorty makes sense. I don't get it. But when you think about it, sometimes doing something that not a lot of people are good at, again, can really benefit you. This is true in any career. Like if I said if you want to go to medical school, you want to be a doctor, it's like, well, you have to pick a specialty. And if you're like, oh, I'm going to be a brain surgeon, and then you're like, ooh, that's my specialty. And then you're going to be like 1 in a million. So do you see, like where you have a mass amount of people that are trading the U.S. stock market all over the world, tons and tons and billions of people, to find like a niche is extremely I'm talking to you from experience. I'm telling you it's beneficial. Not only have I done it personally for myself, I've been able to teach people how to do what I do to be successful as well. And I've done nothing else for this long too. Like again, for those of you that have gone to these different webinars that I go, there's most of the people are teaching courses on, 10 different things. You can't tell me that they're an expert in 10 different things. No, they're not. Do you understand? Like this is it. I don't have like 35 classes. And the few classes I have, which is only basically on gaps, like the Golden Gap is the main class that I teach every month. That's it. And then I have some side classes that are, short half-day classes that is just advanced stuff that you learn. But the Golden Gap is it. That's it. It's like I'm not pretending to be something that I'm not. I was watching Fox earlier today, and they have different people on. They had some person on. This person was talking about, they had the Saudi Arabia prince was there. It was with Trump, and they had a press conference. I was watching it. And they had commentators on that had no business whatsoever talking about politics. They were not an expert in Saudi Arabia or geopolitical politics or anything in the Middle East. And they were commenting. I thought, oh my God, like it was cringe. It was cringe. Again, when I go and appear on TV, on Fox or anywhere I appear, I do not purport myself to be an expert on things that I am not, So just come to the conclusion that if you can become an expert and very, very, totally focused, hone in on that one thing and do it very well, that's where you're going to succeed. And you will get known for that. And that's what's happened to me. But again, you really just want to make money. Like, you just really want to make money. So you got to hone in on that perfect thing to do it. Am I a contrarian? No, not necessarily, because again, I'll go long. We went long NVIDIA this year. We went long Oracle. We went long the market. We went long Apple. We went long Amazon. I could name a million things we went long this year, and I shorted them too. But I'm just saying that as a general tone of the 200 plus trading days of, on a calendar year from January 1st to December 31st, most of my trades are shorts, not because I'm trying to be a contrarian by default, but because I found over the course of since I started trading and over all these almost 20 years that actually very few traders know how to trade, and it's really given me quite a good edge. Most of the times when I'm shorting a stock, I'm near the high of the day, getting in very early and very aggressive. And that takes really some skill set. Whereas even if most traders short, they might be entering a trade at 10 o'clock, 10:30, 11 o'clock, and I'm already out. Or I've got such a good entry that it doesn't matter if I got out or if I want to hold it, I have the choice to do so. So it's about not necessarily being a contrarian to do the opposite for the opposite's sake. It's about finding something that you say, well, this is really, really, really special. And therefore, I want to get good at this because I think I can make a lot of money doing this. And that's kind of where my head was at when I started shorting. Because short moves sell-offs happen faster than moves to the upside. And then I realized that it really was a niche, that a lot of friends I had and people that I met in the industry, like people just, not a lot of them were shorting. And the ones that were, they weren't good at shorting. Do you understand what I'm saying? So that's how it kind of all started like that. It wasn't like I was trying to do the opposite of everybody. But I'm telling you, that's a side benefit, Anyways, looking to pinpoint the direction of the power money by reading the price, which again, we're doing in the daily chart. And again, going back to last week, this PLTR, again, this whole sector has been hammered. Stock closed here, gap down. If you shorted this here or bought a put, fell, broke 180, fell. Eventually, Friday broke 170, but you could have just done a trade here. Again, someone's asking, well, how long did you do it? Like Ken was asking, you could have done a put here. You could have got out here. Could have done a put here. Could have got out here. You could, if you don't want to hold it, just get out. Boom. Get out the day. Don't worry about it then. Just wait for the next trade. If you don't like to hold, you know what I'm saying? Or put a sell order to exit it. This is another one that we did. Again, this had some news. Had some news today actually where it had kind of like a bump up, but we've been watching this since their earnings. Stock closed here. Look where it went. So I'm going back to the end of October. This had earnings. Closed up here at 750 something, gap down here to 670 something. This is pretty crazy. It was almost 100 points. And I don't know where this closed today, but fell almost another 100 points. This is not nothing. These are like big moves. Now, this isn't cheap. So if you did a day trade in this, fine. If you didn't want to do that, you could have bought a put. Again, a lot of people like puts are doing options because of the fact that they're cheaper than doing trades on margin. Again, we're talking about the market today. What happened the day of the market? This is the 18th. The market sold off. The market closed here and gapped down here and fell off a planet. So again, the market fell $10 plus today. That's not nothing. That's a lot. That's a big move. And that's what? It's selling. It's pressure. It's selling. Again, pretend you've been long. Pretend you went long. You made a lot of money this year. You're running a hedge fund. You made so much money from April lows and you just went long. Now you're getting worried. Now you're thinking, maybe I get out. Now it's the end of the year. Whatever. You're worried about the Fed. They're not going to lower rates in December. Whatever the reason are. And you sell. Okay? But again, getting back to trading, it's easy to press the button to make money once you know what to look for, once you have the conviction. If you don't have conviction, it's very difficult. It's just difficult to trade. It's difficult to take risk. I don't want to risk $1 if I don't have conviction in something. That's just my personality. But there's a lot of people that are 50-50 crapshoots in their trades. They're like, well, maybe. Why are you doing the trade then? You shouldn't be doing it, honestly. A 50-50 is not good enough odds in your mind. What's like the reason for doing it? Conviction helps you make money, helps you be profitable. It helps you take the trade. It helps you risk a certain amount of money, whatever it is, whether it's big, medium, or small. It helps you hold the trade. It helps you do well. It helps you to keep going, even if you have a day that you lose. So if I have a day and I have a bad day and I lose, I believe and have conviction in myself and my strategy. And that's what helps me to get up the next day and then come back. Because some days everybody has a bad day. If I didn't have confidence and conviction in myself and everything I do with my gaps, I would never be able to come back from a bad day. You need that. Again, we were talking about how your mind works. And I hear these horror stories all the time about people that take classes, they lose money, they sign up for subscriptions, they don't do well, they lose, they don't make money. Now they don't know if they want to do another class or they want to trade or whatever. I get it. My story was much different. I only ever did one class and I didn't learn how to make money in that class, but I learned the basics of technical analysis. And then I lost money just directly in the market by going back and forth figuring out the stuff that I do now. So my journey was a lot, very unique and a lot different from most people that go and try different things. But sometimes you try different things and it doesn't work out, and that's the process. And however you made it to come to me is the process that you made it to come to me. At least you found me. If you are listening to me and you think that something that I say is resonating, or if you've been following me for a long time and you know that I know what I'm doing, it's one of these things where I don't know why you haven't joined. It's convincing yourself that you're prepared and ready to do it. But as time goes on, it's not moving any slower, and you just are missing opportunity if you don't jump in and you don't start trading. And I said this to people the last class. Well, the people that did the class actually in October and November benefited greatly because, again, we've had some really big weeks here recently with some of these moves. But again, the last class for the year is December 13th and 14th. Which is the last class for 2025. It's a couple weeks away, but I've some people following me for the whole year, more than the whole year, that haven't joined, and people are scared. They're scared, but they trade every day and risk money. And I say, how can you risk money if you're scared? It's like either you want to do this or you don't want to do this, and that's not a choice I can make for you. Maybe you don't really want to trade. But I know that if you want to trade and you want to be successful, you need a support system. That comes from a mentor, and it also comes from having a set criteria and system you can use every single day and apply to become successful. Because again, 50-50 crapshoots, doing a million different things isn't going to make you any money long term. But if you want to trade effectively, you cannot go with a crowd of day traders. And we were kind of talking about that earlier because we were talking about the fact that people were just going long a lot. And it worked at different points this year. People were buying the dips. I was on Twitter earlier today, or I should keep calling it Twitter, X, and people were hashtagging buy the dip. And I thought, oh my Lanta. And this was this morning. Actually, people were hashtagging that this morning. And obviously we did sell off today, So again, Alfonso was saying, do you want to do the opposite just for sale? No, but I'm telling you, there's something to this. Because again, if most day traders are losing, you don't want to be like most of the blue guys here. You do want to be different. So, take that for what it's worth. You can interpret that however you want to interpret that. You follow me? But earning power is extremely important. You don't want to give all your hard-earned money away to the market in losses, trying to figure stuff out, wasting time. Even if you have a small account, you can build it. Again, Rick started out and he's building it. Everybody wants to risk a lot. I get it, but if you don't have the money to do it, you can't. If you don't have the money to trade on margin, then you start with a cash account and an options account, and that's what you do. That's what you do. You start with what you have. You build it from there. It doesn't have to take a million years. You're learning as you're doing it, and that's okay. It's okay. And again, the idea is to make it fun. But if you want to consistently make a lot of money in the market, the only way that will happen is if, number one, you have a high winning strategy. Extremely important for me, it's golden gaps. Number two, good money management. What does that mean? Again, you can't ignore trades when they're up. You have to figure out where you're getting out, and you have to risk the same amount or close to it on every trade. I'm not risking like 1,000 in one trade and 5,000 another and 10,000 another, because then inevitably the one I risk the most would be the one that loses, and I could have two that win that I didn't risk as much, and then you're going to be upside down. So you have to risk the same or almost the same on every trade. Follow me? That's important. And then number three, you need a good mentor to follow in the live room. And I know that the things I say resonate with people because, again, people have told me that. And it helps when somebody's there and saying, do it, do it, do it. This is really, really good. You know, that helps when you have that someone there supporting you and calling it. But we were talking about, when do I trade? Morning. Time of the day is key. It's the most important time of the day. It's rare that I would hold something all day. If I do, it's because the market's power trending. We did have that last week, actually. We had a power trend day in the market last Thursday to the downside. But you don't know necessarily the day before or what day that week that's going to happen. And you could go days without that happening. So that's rare, but it can happen. And again, you could be anywhere in the world. I have someone in the room right now in Australia. He's new. He just did the class. That's tough. He's doing it. It's totally different time zone, but again, he trades in the morning and he's done. So you got to figure it out. Whatever your schedule is, wherever you are, however many things you have going on, there's people that they really want to do this. They make their schedules, okay? If you want to trade for a living, you can do it. You figure it out, okay? So I teach a class once a month. It's called the Golden Gap. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to enter and exit the stock on the day. The course teaches price analysis and technical analysis on an advanced level, which again, I was telling Alonzo earlier, there's no real way to prepare for my class. You just take it, you learn. You're going to learn when you get in the class. There's nothing really to prepare you. It's going to be all new stuff and it's fun. So you'll learn one solid strategy to trade gaps effectively by reading the side of power and charts, teaches you how to read support and resistance to take the positions in the right direction, and teaches a more proficient, advanced way to read charts focusing on technical analysis and gaps, and teaches how to get conviction in your trading the market as a source of wealth by trading with the side of power for consistent profit. We've had some really nice trades in the last 2 weeks. Again, I don't know when we're going to have the next big one. Could be tomorrow, could be Thursday, could be Friday. It's the timing of it. You know, like sometimes people sign up, pay, and they make the money to pay for the whole class in a week. You know, it's the timing of it. They could make it in one trade, or it could take a month. I don't know. You know, I don't know. I don't know when we're going to get huge trades. I do get up every day though, and I'm trying to find each and every day the best thing. I start from scratch. And I never know what I'm going to do. Like, I don't know what I'm going to do tomorrow. I don't know. But I'll wait till tomorrow. And so that's the benefit, again, of day trading, because you get something new every day. And it makes it exciting. It makes it fun. You know what I'm saying? And I was talking about this early, too, about chunking it. We're not long-term investors here. We're not buying and holding forever and ever and ever. It's about chunking it out, taking the trade, getting the move, get out. You could do this with options too. No one says you have to hold options forever. You could take the options trade, you could get out. No one said you have to hold anything, actually. So again, I think some of the benefit of doing options is that you can hold overnight. But no one said you have to. That's like not a rule or something. That has nothing to do with the system. If you don't feel comfortable doing that, you could basically day trade the options. You could, okay? But getting back to this conviction, and I think we'll have time here at the end. I'll be able to listen to a little clip of what I said on Schwab. It's just like, if I could make a perfume or a cologne of what I'm talking about, I'd sell it, you know, for like $100,000 a bottle. And you could just spray it on yourself every morning to make money. It's just like, it's experience. It's a knowing. And the only way you get that is learning something and doing it over and over and over and over and over and over and over again. And if you are all over the place, jumping around like a crazy nut, trying different things, always get rich quick thing, always trying to make $1 million, always trying to get the next big thing, you're never really going to get good at anything. You're never going to get 100% conviction in anything. And you're never going to be successful the way that you want to. And so that's important. It's the steady course of action and the focus and staying on the path. That's how you're going to get you to where you want to be. You know what I'm saying? So empower yourself to trade. Remember, taking a class is education, is a gift to yourself. And I try to make it fun. I certainly try to make learning fun. And here's some testimonials. Oh, here's the one from Rick. Rick, are you here? Is Rick there? Here, I did put Rick's in. No, Rick, are you still here? There. Rick, you're there. I did put you in here. I don't know where you're at today. You emailed me that, I think, yesterday. Anyways, the class is called the Golden Gap Course. It's a full day, 2-day class on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You could be anywhere in the world to take it. So the last class for this year is December 13th and 14th, 9 to 5. Cost is $69.99. Again, you're going to learn the bearish gap system, but I am doing some Black Friday sales. So again, if you're following me, if you're on the newsletter, you've seen that I launched Black Friday early. I'm doing a bundle. Okay, this is where you get the most. It's $1,000 off. $79.99 used to be $8.99 for the Black Friday, though it's $79.99. This ends Black Friday. And you get the trends course, the options course, the Golden Gap course, the trading room in the newsletter, and the market report through the end of next year, and 2 one-hour mentoring sessions with me. If you want to do the combo, you get 2 classes, the Golden Gap, the trends course. This is $1,000 off. It's normally $79.99. You get the market report, the options newsletter, and the trading room till the end of next year. You don't get the mentoring sessions or the options class with this, but this is $1,000 less. Both 2 good deals. And this is going on through next Friday, but I did have people sign up already over the weekend when I launched it, and they're already in the room, and they already made money. So again, and they didn't do the class yet. So as soon as you sign up and join, you can start trading. Now, I say go slow if you're new. And again, Rick, you definitely have to do the Golden Gap course. Whether you want to do it in December or not, I know you're making money doing options, but I'm telling you, you will do better if you know the rating system. You have to be there live. You have to be there live for the class. JT. And again, this is far enough in advance of the holidays. You have time to plan and do it and get in. It's 9 to 5, Saturday and Sunday. It's 2 weeks before Christmas. You got a month to plan it on your calendar. Today's only the 18th. Any other questions? Alonzo, do you have any questions? Ken, what about you? And then some of the other people I don't recognize. Any other new people? No, JT, it's a live class. It's live. Live means you're there, I'm talking. You show up, you do the class one time, you pay for it one time. Alonzo has no questions, okay. I'm going to pull up